Welcome to the Creating Success Out of Failure podcast. Thank you for joining us. Our mission, our vision is to help salespeople and entrepreneurs get through the misinformation that's out there. We want to talk about everyone's trials and tribulations because you know what? We all know at the end of the day, success is not a linear straight line. You're going to get knocked down. You're going to get beaten down. But how do you get up? How do you overcome that? That's what we're going to be going over on these podcasts. So thank you for joining us and enjoy the podcast. Hey, what's going on, everybody? It's John and Evan here. We want to go over something that I feel is crucial to having success and continued success, more success, however you want to phrase it. Even if you're, an entrepreneur or a salesperson, right? Because that's who we're trying to speak to here. And I think this is probably one of the areas that a lot of people get wrong is how to scale your income, whether you own a business or you're in sales. So let's dig into that a little bit. I do want to preface it by saying I am not a financial expert. I can only speak to things that I have done successfully and things that have worked for me. And I've been in sales and I own several businesses. So this is directly relatable to things that I have done. It's good spending versus bad spending, right? And I think a lot of us, both entrepreneurs and salespeople, tend to get this wrong. So that's why I want to go over it today. And let's talk a little bit about entrepreneurs scaling their business.
So what would be your advice on scaling your business? And so you have, let's say an entrepreneur out there has money coming in, right? Their business is beginning to become successful. What would be their next step as far as scaling their income?
Well, let's break it down a little bit simpler, right? No one ever gets rich working a 9 to 5, not a business owner, right? So in that preface, you need to learn how to make money work for you. Money can work around the clock. It is physically impossible. Trust me, I have tried, I continue to try to do it around the clock. At some point, I need to shut down. What does work for me around the clock is the money that I invest. All right. And it doesn't matter if you're a salesperson or you own a business or you do both like me, you can make wise investments into the business, wise investments outside of the business to help scale your earnings. All right. So let's talk about when's the right time for a business owner to do it. First, it comes with a thorough analysis of strengths and weaknesses and things going on in your business. Okay. If we assume that, you have demand that isn't being met, then you should be investing into ways to meet that demand. So if you own a logistics company and you can pick up a lot more work, you're missing the trucks, you come somewhere like me, you get the financing, you buy, as many trucks as you can that will adequately service that business. And that's an investment into your business. That's how you're going to scale your income. When you do something like that, you want to make sure it's working, okay? You don't want to go too over the top and say, all right, I'm going to get these trucks and then no, you should be doing it one stage at a time. Hey, I got this, it's working. All right, what's next? What can I invest in next to grow my revenue, grow my profitability? All right, if it's auto repair, what equipment is still there? Am I marketing correctly? So let's just say you don't have the excess demand, right? You don't know where or how to get more clients from. You should be investing into marketing. All right. So that's why when I say it really does boil down to doing a thorough analysis on your business. If you have excess demand, it's now your job to meet that demand. So you need to invest in anything and everything possible to meet that demand, including employees, equipment, things that are going to let you service it. On the flip side, when you don't have that, you should be investing into marketing efforts. And you don't always have to pay for marketing, right? Some of it could be, hey, I'm going to produce a lot of content. I'm going to show clients how I solve their problems, and then I'm going to let them find me. Okay, you can do that by dropping things and dropping content in groups. There's a lot of different ways to do it organically where you're not paying out the nose. The point is, do the assessment and invest in what you need to invest in. Okay, a good employee should bring in 5, 10, maybe more times what you're paying. All right, so don't sleep on bringing on the right people on your team and training them, right? Because eventually that's how you train, that's how you scale yourself out of a job. Nobody wants a job, right? If you're running a business, you want that business to run and operate whether you're there or not. And a lot of the times that boils down to process and having the right people in the right positions to succeed.
I liked what you said about how when you invest, it can be yourself, you're investing some time and energy into making some things happen, like marketing.
Yep,
If you're still starting out, you probably don't have a lot of a budget to, go crazy spending to get the best marketers you can find. It's really an investment of your own time and effort into marketing organically and making things happen that way.
absolutely. And I can tell you, the reason why I'm so confident in this is I've had people that, when they started, they were doing about $150,000 a month. They kept coming to me to finance trucks. Every time they did that, they would add $50,000, $60,000 a month. Now I have clients that went from $150,000 a month to $1 million a month. That's a huge jump, right? And that works the same in every single business. It's not difficult. Figure out, do you have the excess demand? Yes. How do you meet it? If you don't have the excess demand, you need to work and put your attention and investments into getting the excess demand and then worry about how to service it.
So it sounds to me like there is investments into your business and into what you're doing. And then of course there are investments outside that, people have heard of, like real estate and things like that.
Yes.
So would you say that people, so, let's say you have some extra income as a business owner or a salesperson. Um, how would you recommend you divide it, or should you do one or the other as far as investing back into you and what you're doing, or into
Well,
outside investments?
I don't want to keep it too convoluted, right? Because there's two ways to look at it. I'm in sales, but I also own my own company. If I'm investing as a business owner, I'm investing right now to bring more people into my program, to train them, and to bring on more clients, right? And it could be for every 10 or 12 or 20 advisors I add, I need to add one or two support people. Okay. So as a business owner, that's my investments. Another way to do it is, we're doing well. It's time to set up savings. So I own a business. I should be having some level of retirement. That could be a solo 401k or something along those lines that has a actual tax benefit as well. So that means I'm paying myself or I'm investing my hard-earned money from the company into a retirement plan. A lot of people don't do that. And the cool thing is you can actually borrow certain plans. You can take loans from yourself and pay it back over a year or two. All right. It's setting things up like that. Now, if you are in sales, right, and I think this is where a lot of people tend to get it wrong, have a big month. Well, first off, if you have a big month, the only thing that you should be thinking about is what you went right and how to double and triple down on that the next month so you beat your prior month. A lot of people tend to let their foot off the gas and things. Two, let's just say you only need $10,000 a month to live comfortably. Okay. Whether that's right, wrong, I don't care if it's 10,000, 5,000, 100,000. Everybody has a different lifestyle. All right. Money made over that 10,000 should not be, there. I believe in, small celebrations and rewarding yourself. And you should also be investing, right? So a lot of my investments are rewards. So when I have a big month, what can you do? You can invest in real estate, right? And I'm not going to speak towards flipping properties, right? Because that's not what I do. I invest in multifamily rentals. Why? Because it's passive. For the most part, buy the property, I set up a property manager, they handle everything. And then I just sit back and I get, a few $1,000s in profit every month. right? That allows me to scale my income. It's also a safety net for when I want to retire. Now I have an asset that has a lot of equity in it, and it's also paying me on a monthly basis. I also, invest in stocks. I invest in digital assets. I invest in private companies. So my point being, everybody has their own internal thermostat, right? I don't know why I can't say that word. It's irrelevant right now. I have a certain comfort level when my bank account hits X. When it gets over X, I feel myself self-regulating and kind of dialing down my effort levels. Well, what is a good way to stop that from happening? Never let it hit over a certain amount. And how do I do that? Well, every time I hit, let's just say, for argument's sake, that is $100,000 in my bank account. And all of a sudden, I had 2 or 3 good months, and now it's at 140,000. How do I invest that 40,000? Or maybe I want to invest, 70,000. So I'm under that $100,000 mark. Now I'm investing $70,000. Okay, that 70,000 is going to be working for me rather than sitting in my bank. Does that make sense? It's not, all right, well, I had a good month, let me go out and get a Rolex. Or I had a good month, let me go out and get a Ferrari. All right. My point of view on investing is, if you can't buy it 2 or 3 times, you probably can't afford it. I made, if you look at the purchases I made this year versus the investments, I probably invested 3 to 4 times the amount that I rewarded myself. All right. And even for me, that's a small jump. Usually I invest a lot more than I reward myself. Most people have a mentality that, hey, I had a good month, they take their foot off the gas, or they spend it on things that aren't going to produce an income. Well, what happens is you just wind up with a lot of nice shit that, if something were to go wrong, one day you're going to have to sell that, or you don't really utilize it or wear it or, drive it as much as you'd like, right? And I think that's a big, what do salespeople like? They like to spend money on high-end clothes. I have a ton of high-end clothes. You know what I wind up wearing? 90 to 95% of the time, jeans and a t-shirt. Now, it's nice jeans, it's a nice t-shirt, but it's the truth.
Yeah.
I have nice watches. You know what I wear most days? I wear my Fitbit. Why? I don't know. I like it better than a watch. It tells me my heart rate, my blood pressure, how many steps. So why am I going to invest a lot of money into that when, for, let's just say, $10,000, that's almost a quarter of a decent down payment on an investment property, right? It's having that mindset. I'm not saying be cheap or be frugal, all right? Reward yourself, but make sure you're rewarding yourself more by putting it into the right investment vehicles. I don't know what they are for you. I know what I've had success with is stocks, real estate, digital assets, private companies.
So let's say that there's a listener who is hearing us talk about investing in properties and in real estate and in stocks and things of that nature. They're getting kind of excited, saying, "Okay, so I invest in that, and I get some money back, and it's a good investment to have." But there are business owners and salespeople thinking that and hearing what you're saying. Um, which should both business owners and salespeople, like, should one of the first things they invest in be those properties that you're talking about, or should business owners really just focus on, so if they have the 100,000 and then they have 140,000, should they put that 70,000 into their business or into properties and stocks and things, or both?
That's an outstanding question, and I'm going to say that I am not a financial analyst, or I can only tell you how I view it and what's worked for me in the past. I treat my business separate from my personal income. Right, wrong, indifferent. That's not how I view Sprout. It's not how I view my personal investing. So when it comes to Sprout, I invest in things that are going to help the company. Okay. When I pay myself based on the value that I brought to my company in that current month. Some months are much better than others. I usually have a baseline of how much that's going to be. I also have a baseline of what my personal expenses are going to be. So if Sprout has excess money, I rather develop something with that with Sprout. I'm typically not buying an investment property out of my company, right? I think it gets a little convoluted that way. Again, I'm not an expert. I'm just telling you what I've done, right? Now, when me as a person, an individual, have excess money, I like to make it go to work for me as quick as possible. I'm usually buying an investment property. I buy stocks. There's easy ways to do it too, guys. So for me, and I got this from Ryan Stewman, and it's great. You know, if you have a TD, trading account, what you can do is you can make a weekly deposit into that of whatever you're comfortable with, right? So now every week I'm transferring money into that account, and when a certain stock or company goes on sale, I can go in and buy it, and I'm always buying consistent companies. What I would say is it's important to invest in things that you know. Most of the times when I've invested into things that I did not know or did not learn about enough, I have failed. Okay, I've been taken advantage of. I've lost money. People have actually gone to jail because of it. So my biggest point to you is if you are interested in, you know, real estate investment, or you're interested in investing into the stock market, or that's on a personal side, I would read into it, right? Or find the foremost experts who do that, pay them, and have them help you.
I would like to throw in a disclaimer and a question as well. First, I want to say that all the things that we're talking about here are good ideas that can potentially be very beneficial to you, the listener. However, I would say your next step shouldn't be going out right now and investing in a real estate property. Your next step should be either researching as much as you possibly can on your own about how you personally can make that happen, or go out and find someone who's done it and can help you on a personal level and pay them to do that with you. So that
Absolutely.
should be your next step. Don't just go off. Oh, I heard Jonathan tell me about this, so I'm going to go try it right now.
Yeah,
I would take this as your first stepping stone to eventually making that happen. So this is giving you the idea to add these investments. Now you need to go out and get the training and get the
absolutely.
expertise to make it happen.
And the questions, right? Like, so to your point, you don't need to pay somebody. There are tons of books and this wonderful tool called Google, right, to look at trends.
Yeah.
So if you read about someone who's done it successfully, let me caption this. I prefer to do, if you're going to read up on it, read up on recent things because trends in the market change. So read up on recent things, okay? Recent books, recent courses, because while some of the principles and philosophies always hold true, certain trends in the market might not, right? So when I invested in, let's just say, City X, City X had different types of cap rates. It had different, price point entries than it does today. Why? Because I did the research and I got in early enough and felt and saw that the population was growing, job growth, the job growth was very, very high. So I found an area that was very worthy of investing. And because of the overall trends of that city, it was very hard to pick the wrong property. Anything I would have picked probably would have done well, and they have. But it took a lot of time, effort, and energy. It also took, me finding the right team to manage it so I don't have to manage it. That's important. All right. That was a lot of legwork, but it was worth every penny. And the best part about it is now I can go and duplicate that when I want to go and invest. If I don't have a clear idea of what to do, I know exactly how to do the research, how to set it up, how to build it, and it's just a matter of finding the right property and the right team. Same thing with stocks. Trends change. Okay. So that's something you want to research or reach out to someone who is a professional and have them help you. Same thing with digital assets. Digital assets go in cycles. Private companies go in cycles.
I had a question about something you mentioned earlier. So you when you're a business owner, and this is kind of off topic, but this is something that will tie into what we have been talking about. If
So
you're a
the guy
business
that's
owner,
supposed to keep me on topic is going to throw me off topic. I love it. Let's go. What's the question?
so if you're a business owner, and this would be geared towards people who are in the pretty much in the very beginning stages of starting their own business, probably starting their own online business, right? So they're hearing this and they're
Hmm.
looking at ways to grow. You mentioned before how your Sprout or your business has its own income and its own finances, and then you kind of pay yourself, if you will, out of that, depending on how the business is, how things are going each month. So does that mean, if you're a business owner, would you recommend having a separate business account or banking account and debit account, things of that nature, for all of the income from your business to go into, and then from there pay yourself out? Is that what your system is?
Mine's a little different because it's a little bit bigger, right?
Okay.
So I have a checking savings account. Every business owner should have a business bank account. That's bottom line. Whether I pay myself W-2 or commission, that varies into what account it goes in. But when I just want to clear up, I think it's important for me to clear up. I don't pay myself based on how well Sprout did that month. I have certain standards, right? And commission, and I pay myself based on the impact I had for the company that month, right? I pay myself less than the advisors make, okay, because that's part of reinvesting into Sprout. So I pay myself less than the advisors make, and I pay myself separately from Sprout, and then Sprout gives me a W-2, right? That's just how I'm set up. As far as your question, I think you were going to go, when should I know when to invest? Was that where you were going, or?
Yeah, pretty much. So let's say someone is growing their business and they
Mhm.
have it now, so their business and themselves are separate in the area of finances. Because I know that our audience, it could be people who are on all different stages of business,
Absolutely.
being a salesperson. And I know that, me personally as well, since I'm probably at a lower or more towards the more beginning level than say Sprout. um, there comes a point where usually if people are starting their own online business or coaching practice, a lot of the times their own finances and the business finances are one and the same.
Yeah,
So let's say
I hate
you're
that.
yeah. So people are going along. They now their business is beginning to split off from them, and they have their businesses separate, and then they pay themselves out, and they're separate. So would you say then that at what point then do you think it would be comfortable to continue to begin to invest back into business and then invest into outside?
You need a set agreement with yourself.
Mhm.
Okay. I'll give you an example. If your business is doing, let's just say $20,000 a month, all right? It depends on where that 20,000 is coming from. Do you have people selling for you? If so, they have to get paid out of that, right? If it's just you because you're a one-man shop, well, you have to take a certain percentage for yourself. So some should be W-2, some should be commission, because if you are the only person selling, there's a good amount of, you know, commission there, and you have to figure out what's fair. And the way I would figure out what's fair is if you were to hire somebody to sell for you, how much would you pay them in commission, right? So pay yourself that. Now you've just separated the business and you as a person, all right? And what'll happen is you don't touch the business savings until there's an investment, okay? It makes you work harder and it separates both entities. And this is just me speaking, like this could, other people may have other systems. This is just how I would do it. So when you have 20 grand in the bank account, 30 grand in the bank account as a business owner, well, what's the easiest way to make that scale? So in your, in your world, well, you could hire somebody to sell for you. You could hire somebody to do the back end things that are tedious that you don't like doing, right? You could probably go on Upwork and find someone to do it really, really cheap in a different country. As long as they're producing quality and you're checking every little thing they're doing, that's fine. It frees you up to go sell more or to work on bigger picture things in your business. All right. So what's the investment? At your stage, it's probably going to be in, you know, taking things off your plate that you don't really need to do, that other people can do for you, and bringing in more sales. How do you do that? Marketing and sales. So investing in both marketing and investing in someone to sell for you. All right. Once you got that figured out, I'm not saying you stop selling, okay, but there will be some more money coming back to you. Now, as far as you investing personally, right? Because that just covered the business investing and the business scaling. Well, Evan as an individual, well, the more you sell, the more money you're going to make and the more money the company is going to make. Now, when you have excess money, excess capital, you then do the research, figure out exactly what you need to invest in and go from there. I truly believe figuring out one of the big things that you need to do first is figure out what are your monthly expenditures. And once you figure that out, you should always be trying to earn, well, in my point, I want to make as much money over that as possible. And when I do that, roll it into different investments. And what happens is you get this beautiful thing called the compound effect, where, if you have, call it 10 other investments and they're all working and all you have to do is monitor them. All right. Now you have that money coming back to you. And when you have that money coming back to you, it is much easier to go out and invest it in something else. Okay. The biggest challenge I see is people need to be consistent with it. So when you keep investing, it's not always a year one win or a win in the first 6 months. It's you setting up and having that long-term belief in yourself and long-term outlook where, hey, if I get an investment property, so at first it might be, I want to get an investment property once every 2 years, right? Because it's got to stabilize and you got to be sure it's working. After that, maybe you get one every year, and then you're getting 2 a year, and then you're getting 3 a year, and then 4 and 5 and 6 and 10, right? And now you have a massive rent roll and you have the ability, to sleep a lot better at night, in my opinion, and you have the cash flow to keep making more investments. And that's the compound effect of investing. And it works the same in your business, right? If you take a look, if you're always investing money back into the business, whether it's marketing, staff, additional programs or products you can bring on, you're generating excess capital. All right. And at that point, your money is working for you instead of you working for money. When you're working for money, you're never going to become wealthy. It's going to be very hard to scale your income. However, when you invest wisely and you put your money to work for you, you're going to be able to have a lot more success. Maybe not in the short term, but certainly in the long term. And it's about sticking with that. And also always having, I do think this is important. A lot of people don't do this, having a backup account. What do I mean by a backup account? You need savings, right? So if you always have savings, if things don't go as expected, you're able to tap into that, if the markets change, you need to view that as an opportunity. So let's just say in 12 months, if we start heading into some level of a recession, I'm not saying we are, we're not, things go on sale. What does that mean when things go on sale? You want to buy them, right? So if real estate drops 20, 30% across the board, you're getting a discount now. You want to be investing heavily into that. If stocks go on sale 20, 30, 40%, that's an opportunity to buy. Okay. So you need to realize that and you need to be prepared for that. So it's not just, all right, cool, 250, if I save $250 a week, you invest it right then and there. That's so that you can do it that way, or you can wait for things to go on sale. I think doing half and half is a good approach. Have gunpowder ready for when you're about to go to war or make big purchases, but invest along the way. Either way, your money's working for you, and it's easier to scale your income. It's easier to scale your business. A lot of times, and what I've seen, when you get to a certain level, you have a certain level of certainty, right? You're more sure. You have that safety net. You have that gunpowder. When you get to that level, it's easier to make better decisions because you're not stressed about money. And I know that's hard. A lot of people are stressed about money. Even people, millionaires, billionaires, they still stress about these things. Maybe not as hard, but their investments certainly are bigger. All right. They're just playing the game at a much higher level where more is at stake. All right. People have the same, but you need to have the right mentality about money, the right mentality about investing. And when you do, it makes it much easier to grow and scale your earnings.
So what would you say would be some action items that people can take away from this episode, as far as so they know if they listen to us, they agree that, okay, investing is a good idea both in my business and outside the business with real estate and stocks and things of that nature, right? Depending on what their position is.
Awesome.
What would you say, like what action should they take, right now or next?
Treat your business and your personal separate. All right. Figure out do a thorough analysis of your business. How can you improve? What do you need to invest in? Is it you need to invest in demand and marketing, which you should be doing anyway, either way, or the ability to support that demand and bring on more revenue because the demand's already there, right? And then set aside a little bit. This doesn't work unless you're setting aside a little bit every month to do that. So what I would say is understand the baseline of you as a person, you as a business. And when you make over that, make sure that, comes off, you put that away into a savings. When the savings hit a certain level of your choosing, right? Anything over that, that's going to be what you're going to be investing. All right. Don't make random purchases that you can't afford or you probably shouldn't spend on. As a person, what you should be doing is looking at and researching what investments you're comfortable with. Only invest in things you know, right? Or that you're willing to learn about at a high level. And instead of, splurging on items that are not going to be producing money, make sure that every time you get that overage in your account, you have a way to make that money work for you. And if you're always making money work for you in the business and your personal life, your ability to leverage that money, have the money work for you, and create and scale your income will be a lot higher. And I'm telling you, you'll have much more peace at night.
And that's how, and that's how you go from starting your business and starting out as a salesperson to, over time, because it does take time, having wealth, actual real wealth.
And it's consistency. A lot of people don't want to go through and stick out the ups and downs. All right. And if you're consistent with investing, you're consistent in growth, eventually you will win and it will be easier. If you only do it, here and there, it's eventually you're going to have setbacks or you're going to think it doesn't work. Anything worth doing is worth doing until it's completed or a success. All right. This is something that is absolutely worth doing. I think one of the biggest failings of the American school system is we're never taught these things. I was very fortunate that I had parents that understood it and spoke to me about it, but I also went out and decided I need to learn that at a higher level. And that's what I did. School does not teach you how to balance a checkbook. It doesn't really teach you how to invest. It doesn't teach you how to start and operate a business, right? These are things you have to learn from doing. It's a major, major failing. It's why most people as individuals are very, they're not set up for success. They're not set up. A lot of people, unfortunately, are going to be working into their 70s, 80s, and they're taking a big risk with their financial health.
Yeah, it's not really having wealth and having success from a monetary standpoint isn't really about having a fancy piece of paper anymore, right? Having a college degree or a high school degree. It's about,
No,
doing what we've
a lot of times that degree comes with a high level of debt at crazy interest rates that never really goes away, and you're kind of burdened the entire time out. Whereas if you invest in the right type of coaches, the right courses, the right, careers, you can avoid a lot of that. I'm not saying college is bad. I'm saying college isn't for everybody. And
Yeah.
you get out of it what you put into it. And a lot of times that college degree could be a foot in the door. It also can be a burden, moving forward after you graduate. There's a lot of different ways to look at it. That's not really what we're going to dive into here on this podcast. But what I would say is, people in this country are not educated into financial health, right, and financial well-being. And and it's definitely something that we lack. And as a country, as a community, we need to get better at it. Okay, a lot of people are set up, and they're not set up for the long term. And even if you're just investing a little bit every week or every month, that adds up versus always going from a deficit, right? And it doesn't matter if where you are in that spectrum. You could be making $50,000 a year, 100, 250, $1 million, and same thing with your business. It could be a small business, doing 5, 10K a month, or a larger business that does millions. You need to have the mindset of, how do I grow? How do I scale? How do I have my money work for me? And until you're in that mindset, money could and probably will be an issue for you. And I'm not saying even once you have that mindset, everything's fixed. I can just tell you my swings are a hell of a lot bigger than most other people's swings, because when I invest, I'm not investing 5,000 here or there. It's usually 30, 40, 50, 100. And something doesn't work out, that hurts. And also, invest in yourself. That's something we didn't cover, and I think we're going to end it on that. Invest in yourself. Invest in reading, okay? Invest in learning. Invest in the right network, because that will make you a better person. If you're a better person and you're constantly working on yourself, the right mindsets happen, the right opportunities open up for you, all right? Let's leave it off at that. Please give us feedback. 5-star reviews would be outstanding. Also, please share this episode with people. I know this one in particular, a lot of people are going to find very helpful and very useful. And anything you guys want us to cover in the future, just, reach out, drop it in the comments, and we will create it. That wraps up this episode. Remember, we are not here to sell anything. We're only here to help people, help entrepreneurs, help salespeople level up, get their business and finances and health to the next level. So please, we're never going to sell you anything on the show. If you got any value at all, just one little thing, all I ask is a 5-star review and that you share this episode on social media. Thank you, and continue leveling up.